Hi there. So, what are the do's and don'ts of purchasing a property? Myself and Patrick discussed the do's and don'ts as a buyer on the financing end in the first video. This second video discusses more about how you should approach the actual home purchase. Certainly, we'll talk about pre-approvals, which is tied into the financing. Then we look into other things about what property you're looking for, whether the price is negotiable when you're making an offer, the three L's: location, whatever that third one was, of real estate, and the intangibles of buying and selling real estate. So I hope you enjoyed this video, and certainly feel free to reach out to me if you're looking to purchase a property. Thank you.
All right, here we go. Looks like we're now broadcasting live once again through the power of social media. Patrick Queally here, your friend in the mortgage business and host of the Wicked Awesome Report, joined by my co-host, Declan O'Toole. Good morning, Declan.
Good morning, Patrick. How are you?
I'm doing well. So Declan joins us from Select Real Estate, and he's our co-host here, broadcasting on the Wicked Awesome Report every Tuesday and Thursday morning at about 10 a.m. So head over to the Wicked Awesome Report Facebook page, give us a thumbs up, give us a like, share a comment, and you'll be notified next time we do go live. So we are sort of bookending a topic here, the do's and don'ts of real estate financing and purchasing a home. Last episode, we talked about really more things on the financing end of things, sort of my area of expertise, I guess. So this show, we're going to talk a little bit more about the property, the real estate itself. And Declan, you're going to be the star of today's show. So congratulations.
For better or for worse, right?
So let's just jump right into it. So some of the do's and don'ts when purchasing a home. So obviously you represent both buyers and sellers. So you've got perspective on both sides of it. Let's focus more on the buyer side for this episode. And maybe there's a topic for a future, the do's and don'ts when you're selling a home. But let's focus on the buy side for today's call. So I know you've got a list that you're working with, and we've got, give or take maybe a half hour a show, so we might not get through all of it. I'm sure we've got some funny stories with each one of the don'ts. So I'll throw it out to you. What's the number one or first item that's on your list that a buyer should be aware of to either do or not do when they're looking at buying a home?
Patrick, I'd say chronologically, and it kind of ties back into the last time we spoke. And yes, we could talk for 5 hours about this. So I'm going to keep this very specific to essentially making offers, finding that home and making offers on the home. There's a lot more to it. But I will say just to reiterate, because it's a very important point, is absolutely get pre-approved. And I would say, as we said, again, not to get back to it too much, look, if you're looking for a home, immediately go along the pre-approval process, speak to somebody like yourself, so that, even if it's 6 months out the line, if you need to get something done, be ready to pounce when you have to do so.
No seller or no real estate agent's really going to take you seriously if you haven't already gone through the pre-approval process.
Right. Exactly. So you're starting from behind the 8 ball right there.
Mm-hmm.
So I would say essentially, I won't say it's the biggest one, but there's somebody's buying a home. Very often you're obviously trying to buy it. Price is a major consideration, and everybody wants to get a property for the best price possible. Don't always assume that the price is negotiable. What am I saying there? So you have different price strategies from different sellers, and very often for different markets. In other markets, but sometimes in this one as well, a seller will leave a property out there and leave room for negotiation on the price. You put it out at a certain price and say, okay, I know I'm not going to get that number, but let's see where we end up at. Mm-hmm. In this market, for the most part, you're looking at properties that are being put on, and any buyer that's been out there, multiple offer situations. They put it on at a certain price. They might think they'll get $820 for it. They put it on for $799, right? $799, $900, not $800, $799, $900. And if you come in at $770, you might as well not have made the offer. There's, and that speaks to another part of this is lowballing offers. that sometimes used to work. Let's put it this way: there was a market, we were well aware of it back in 2008, 9, 10, 11, where at properties in the market there might have been short sales where you would lowball an offer, they absolutely say no, and then come back to you. It could be 2 or 3 months later. That's not the market we have right now.
Yeah, I'd say back then we were dealing with more homeowners, more consumers that were in a certain amount of financial distress.
Correct.
And it was sort of, I don't want to say they would take whatever they could get, but lowball offers weren't treated in the same way that they are right now.
No, and it's, and yes, you would have might have offended the seller, but it was less about their personality. It was about their need. It was, distress sale. So yep. Different situation. You don't want to offend a seller. That's not a good way to get started. Mm-hmm. If you're working with a professional, let them do the work. We're paid to negotiate. Maybe speak with your broker first about the pricing, but I would say certainly in this market, lowball offers probably a no-no. So just throwing that out there. And actually, I would say they are a no-no. You're going to get exceptions to the rule in terms of what the property is. Another thing, just the property itself. We're going to talk more specifically, as I said, about the actual properties, making offers and checking them out, is getting distracted by flashy features. There's a house might look good. We call it putting lipstick on the pig. Yeah. Property might have its Botox and look really good on the inside, but you need to make sure that you're paying attention to the lot, the building, its location, thoroughly inspect the property, know about its bones and structure. So, know what's going on with the property. The other thing is there's getting distracted by the flashy details. You can also overlook a lot of the important details of a house, which is the electrical. For instance, if it has knob and tube, sometimes you have issues with your insurance on that. Yep. But I've also seen it, if a property is purchased and a month down the road, they're tenants, or even if they're not tenants, they're moving in themselves, that you put on the toaster, somebody else puts on the Vitamix, and the TV is running at the same time, and everything goes out. So it can be quite expensive, and sometimes it's not just a case of adding, a couple of extra breakers. It could be an overhaul of the electrical system, which can cost you, could be 25 grand. I can get it for 15. That's another reason to use a broker. Somebody that's another conversation. But
yeah, so you don't want to get distracted by the fresh coat of paint and the fact that they've got a Nest thermostat on the wall. You want to dig in a little bit deeper.
Yeah. And actually, by the same token, Patrick, you don't want to be put off necessarily by the red walls and the ugly cabinets, right? Sure. So there's two ways of looking at this. You can get distracted by
the good stuff and the bad stuff.
Correct. Yeah. You gotta kind of stay focused on what is it you're looking for. What are the bones of the property? What are you trying to get out of the property? And you know what? Cabinets, not just cabinets, you can get cabinet doors can be replaced, walls can be painted. And those are things that you need to be able to. You need to see a property for its true potential in that case, and you got to see the potential issues in the other case where you're looking at the property for its aesthetics.
Yeah, so you got to use your imagination in terms of the cosmetics, but you got to dig in a little bit deeper to see, I guess, what the bones of the house are and make sure everything is structurally sound. Again,
the leaks in the basement.
The good and bad. You got to take it both and understand what you can and can't live with, and what can and can't be fixed or changed.
Yeah, and it's you talk about looking at a roof, you start looking at siding, but any good home inspector will tell you, your best knowledge of a home is usually in the basement. That's where the systems are. You get to if you can bring somebody through that knows a little bit about the mechanics of a building, and just make sure that everything looks good. Water heater, it's not a huge cost, but that goes. You got a flood. That's it could cost you replacing it. It's anywhere from $700 to $1,000. Boiler, obviously, you need to take a look at. As I've already mentioned, the electrical, and obviously a roof is a very important feature to take a look at. Something else I think is just in terms of what you're looking for from you're living in a property, is limiting a home. Sometimes people limit what they're looking for. They want to get a nice colonial. They won't touch a ranch. They won't look at another style of property. So you got to keep in mind when you're buying a home is where you make it. It's a lifestyle that you have. It's not what it looks like on the outside, unless you are, that particular. But you're going to find a situation. Let's say, give the example of the person who wants the colonial, doesn't want the ranch. They maybe, it depends what they're looking for. Like I can speak to myself. The whole COVID thing. We may be looking for a home ourselves pretty soon. I'm going to be looking for an office, or myself and my better half will be. I'll get a small office. She'll get a big office, but maybe an extra bedroom. So we'd like a colonial home, but you know what? I'm actually looking at out there, and there's some nice ranches that have, they have the nooks and crannies where you can put, you can have the office. So again, I suppose my point is, when you're searching for a home, you're not just limiting the style. You could be limiting the number of bedrooms. You could be limiting all those extra features that a property that's not exactly the style you're looking for might actually have.
Sure. Yeah. So you want to stay, open to the possibilities and the potential. You may prefer a colonial, but you may find a ranch in the right neighborhood.
Right.
And
maybe it's a split ranch and you get 2 levels of living. And,
exactly. And what I was going to say is, even with some imagination there, you can convert that ranch or that cape into a colonial.
Right.
You can go up, another level and turn it into what you want it to be, what your vision is. So I guess don't necessarily go out there looking at homes with the blinders on. Be open to some of the possibilities.
Exactly. And you mentioned that too about the neighborhood. You should, when you're buying a property, you should always be thinking about selling it one day, right? Or not with the intention of selling
the future resale. Yeah.
Exactly. And there's 3 L's: location, and location. That's
there you go.
You never remember that third one. But you buy for the location. You do not buy for the price. Now, price plays a big factor, but you do not buy for the price. Something actually, it's a side note, but part of that too is when you're making an offer, I always certainly tell advise my clients, to have an upper limit on what they'll purchase a property for. But do keep in mind that when you're buying a property, you live in the mortgage, not in the price. And what I mean by that is, you're paying a certain mortgage payment. It's a certain dollar amount you're paying per month. That's what particularly if you buy right in a good location, the appreciation will take care of itself in terms of your future value of the property. But you got to be just watch your mortgage, what your mortgage payment is going to be, and
exactly that. It's that monthly payment that's one of the most important numbers, and of course that is derived from what the purchase price and loan amount is. But we're actually using some tools right now with clients that in this appreciating market are going in and making offers that are above that listing price. They're faced with those bidding wars. And sometimes they're getting a little bit nervous. Well, I'm offering 20, 30 grand more than what the list price is. Is the home really worth it? So what we're doing is we're putting together some appreciation models and showing them if they pay that price today in X number of years, they're going to outpace that appreciation and actually have a much better equity position if they buy it for that price today.
Oh, very good. That's a good way to go about it. Actually, and while we're talking about price and cost and appreciation, I suppose something you and I kind of, and I think there's 2 sides to the story, but it's interesting. I sometimes see people, I feel like they don't put a large enough down payment down on a property, where I feel like their monthly spending will go down. Now, I think you've got a different angle on that, and certainly as a...
Yeah. So I think, when you're, so when you're the real estate agent representing the buyer, or if you're the agent representing the seller, an offer comes in and it's a substantial down payment. I think that sort of the psychology of that, you're looking at and say, well, these are well-qualified buyers. They have a lot of money to put down. That's a solid offer. On my side, in most cases, and there's always exceptions to the rule, but in most cases, I'm going to advise a client to put as little down as they can, get away with, and the payment still be affordable for them. I'd much rather see a client hold on to more of their own cash and have that emergency fund, have that nest egg to fall back on, instead of giving a larger down payment and having a larger equity position and maybe a slightly lower mortgage payment. And, not to compare exact numbers, so, these numbers may not play out, but sort of the example, the formula does. So one way that I would propose it to a client, so Declan, if you're buying a home and you're deciding on whether or not you're going to put 20 or 25% down, I'll say to you, okay, well, look at it this way. Which is more important to you? That extra $50,000 in your bank account or an extra $200 a month? Okay. In my perspective, I would tend to say it's going to be easier to come up with an extra $200 a month than it is to come up with 50 grand all at once if you need it. I'd much rather see you as a client hold on to that $50,000 in your bank account and figure out a way to come up with an extra $200 a month. And that may be simply tapping into that 50,000 until you sort of grow into that payment with new job raises, and you have a little bit more income.
So my only counter to that is, you said I work on the buy side and the sell side as a seller's agent. And I think there's a compromise here, is so that you're talking about specifically, again, going back to where, what are you better off as a buyer going forward? When you make an offer, one of the first things you look, I do a line item, right? Price. Usually the next thing is loan to value, right? Is how much you're putting down. Because how, you're, as a seller, you want to know how likely is this person to close compared to the other three people that are behind them. Yep. So this is my thinking is, certainly as an agent, and again, we can go over and back on this, but I feel like if you can put as much down as possible, certainly at the offer stage. Now, of course, when you get the loan, it doesn't necessarily, they have to be able to prove that they can get to a certain loan amount, loan to value. They don't necessarily have to close with that, or more to the point, maybe they could close and then refi in 3 to 6 months time. And
there's a lot of times there's a difference between what the earnest money deposit is and what the down payment is.
Yes.
It doesn't always have to be the same number. So a client can give, at signing the purchase and sales agreement, 10% of the purchase price as the earnest money, or 20% of the purchase price as the earnest money. And that's held by the agents until you get to the closing table. And despite giving a 20% earnest money deposit, well, maybe they're getting financing for 90% of the value of the home. And in that case, they've given an excess deposit, so they've got money coming back to them at the closing table. I've certainly put transactions together with clients like that. They're showing their financial strength. They've got the cash. They're willing to risk their 20% until they get to the closing table. But in reality, once you reach the closing table, what does the seller care what the financing numbers are? You're at the closing.
They get the same amount of money at the closing.
Exactly.
You just want to make sure that seller is informed enough to know that loan to value being lower, that you can you're showing your value with the higher deposit.
Exactly. And that's, and that's why you got to work with, competent, knowledgeable, experienced real estate agents in the transaction. One of the things we were talking about earlier, sort of the do's and don'ts, if you go in making an offer and you're not represented, that create some challenges for that buyer. So talk about that for a minute. So what the advice you have, or the do's or don'ts for a buyer making an offer if they think they should go in and make that offer without being represented by a real estate agent? What are the pitfalls there?
Well, I'll tell you this. When I'm selling a house, I lick my chops when I see, I'm a nice guy, but I eat what I kill, right? Yeah. So if I see a buyer that comes directly and I'm selling a home, my job is to get the best prices and terms for my seller possible. What buyers come directly to me, always overpay. I'll emphasize that, always overpay. So I get the logic, right? None of us want it. It's a lot of money. Here's the other thing too, is if you're a buyer and you're buying a home, and you're working with agents, the seller pays the fee. Now, there's a little bit of it being baked into the price. Don't get me wrong, it's not all, but basically, from your perspective, you're purchasing a property, you're not paying the fee first off. So that gets taken off the plate. That gets taken care of by the seller at the closing. You might be good at math. You could be mad Excel. You may have mad Excel skills. Maybe it's Google spreadsheets you use, right? You could be fantastic. there are too many intangibles that you cannot calculate when you're purchasing a property. And that's, you know, and again, we could do a whole show, we could do a whole day on this one, but you know, there's a number of different things. You know, the agent knows the market better. They can give you advice, just like the very first thing we talked about, getting pre-approved, walking you through it. They know the professionals, everything down to the right mortgage broker, the attorney, but even there are other things. You see a property, maybe it has, you know, an issue with the stairway and maybe the cabinets we talked about. Maybe there's, you know, hardwood floors that need to be taken care of, or even the electrical work that needs to be done. A lot of these agents, if they're good at what they do, they live and breathe. They're in that industry. They know people that can take care of this stuff.
That's their profession, to help and guide you and give you some advice as to what the challenges or what the positive features of the property may be, but also to connect you with the right professionals, you know, contractors or whatever, to bring your imagination to life. So if you are, like we talked about earlier, if you don't have the blinders on and you're open to, you know, possibilities in a property, well, sure, maybe you need a contractor to bring those possibilities to life. And if you're working with a good real estate agent, they should have those connections to be able to help you.
Well, you know, as my mother once told me, an ounce of medicine is worth a pound of cure. And you know, if you use an agent, we went through a whole bunch of things. We talked about low ball offers, the style of home, all those things. If you work with a competent broker, they should be able to guide you on a number of those, so you're not hitting the pitfalls that we're talking about today. So, but yeah, I can go on and on. There's a lot to be said for that, but certainly buying without an agent, I can see the pitfalls because I see it all the time. And as I said, it's a great thing for a seller when a buyer comes unrepresented, because whatever that 1 or 2 or 3% you think you're going to save, you're going to lose it somewhere else. So
good point. So make sure you hire a competent professional to help you through that process.
Navigate that process.
So,
and they'll work with you on the spreadsheets too.
Oh, exactly. Yeah, it's fine to have all your spreadsheets and do your homework and be an educated consumer, but you're not buying and selling houses all day, every day. You might do it a handful of times over the course of your life. You know, hire the professional that's doing it all day, every day.
Right. Exactly. And it's funny, even talking about the Excel thing, you know, you've heard of paralysis by analysis. That hits a lot of, you know, if you are the person that is smart enough, that can be one of the biggest holdoffs. You know enough to be dangerous to yourself because you just won't be able to move.
Well, we won't mention any names, but we certainly have had a couple of mutual clients where that's been the case. So paralysis analysis with the spreadsheets. Yep.
And we don't have to mention names because there's more than one, so they don't even know which one we're thinking of.
Yeah, exactly. There have been a few. But I think that may bring up another point, some of the do's and don'ts. In today's market, with it being so fast paced, properties going under agreement very quickly with offers accepted, what do you say to sort of the hesitant buyers that are sort of, I guess, hemming and hawing, you know, should I make an offer or should I not? I mean, does that play into them just not really being ready, or, you know, what kind of advice would you throw to somebody?
Well, so again, this is where I think you need to have somebody you can talk to about it, even if it's just a sounding board. I do think, look, you know, if you're buying a home, it's one of the biggest purchases you're ever going to make, right? Particularly if you're a first-time buyer. So there's kind of, there's 2 pieces of advice on that. One is, if you see a property, and I've seen this with first-time buyers too, where you see a home and it's your first home. It might be a third home you go into, and you say, you know what, I haven't seen enough properties, enough units yet to really get a feel for what my, you know, this is not the right one in theory because I haven't seen enough properties. Let's not make an offer. What I inevitably could happen, if that's the one for them, or they feel like it's the right property, they'll wait. They won't see the one I want again. And then what's going to happen is because the market rises and the market will move, and they'll pay more for less property.
Yeah, they'll come back to that property that they liked, and it's already under agreement with somebody else, and, you know, market's appreciating. So like I said, now they have to pay more for a property that they don't like as much.
Right. Or even if they get to something similar to that, they're going to end up paying more anyway. That's just the nature. That's the nature of the beast, the nature of the market.
Yeah. So if you are ready, be decisive and be willing to pull the trigger.
Correct. Now, there's a few other sort of thoughts on that too. Is, everybody has a list, right? I have my own list, and
Mhm.
I still haven't found a property that has everything I want in it. But the indoor swimming pools, there's not a lot of those in the city. But that's the other thing is, if you've got a property that hits 7 out of your 10 items. Now, obviously, some of the more important ones, maybe number of bedrooms, number of bathrooms,
Mhm.
the parking space. Some of those, there's some that are absolute do's, but there may be some extras that are not quite as important. Maybe it is the office, maybe it is the size of the yard, whatever those items may be. Maybe it's
Yeah, so it's a hierarchy. It's absolute needs,
yeah,
wants, and then things you'd like to have in a
hopes.
property.
Yeah,
So the needs are probably the number of bedrooms based on the size of your family. The
right,
need may be the location, to be in a particular town or school district.
right.
You may want a nice big backyard. You may like to have a detached garage, but you got to put that hierarchy together and find what really is the best, I guess, mix of the needs, wants, and likes.
Well, it's like I've had this conversation with my wife. We saw a property that didn't have two walk-in closets, and it only had one car garage. So I was just asked her, I said, "Where are you going to put your clothes, and where are you going to
Yeah,
park
exactly. Yeah, so
your car?"
it sounds like all of your clothes are going to be in the car on the street.
Yeah. That takes care of that problem, right?
I can see how that conversation is going to play out. Yeah.
But the other part of that, though, by the same token, and I've seen this happen, is people. So what happens then is a buyer can get discouraged, right? It's a tough market. You got to work through it. And they see a property and they're hesitant. They make an offer because they feel they need to tie one up, and they're hesitant about it. They're having doubts. They're second guessing it. They might think that they've overpaid for the house. If you're thinking more, if you're less, let's put it this way: if you're more worried about the house, now a certain personality, some people are going to be worried anyway, but if you're more worried about the house, then you should be excited about it. It's time to have a heart to heart with your agent, with your better half probably first, and then also speak with your agent and the professionals, and just make sure you're wholly confident in the decision. There's nothing wrong with issues, but
the process certainly can be stressful because we're talking about high dollar amounts here. But you raise a good point. You should be more excited and looking forward to the transaction and getting into your own new home. You should be more excited about it than you are worried or concerned.
Correct. Now, that being said, if you find the right place, maybe it ticks 7 or 8 of those boxes, right? You don't get that second walk-in closet. And you decide this is a home you want to make an offer on, make the offer. It happens all the time. You could be, you may be the only buyer because you got in, early before an open house. And that's the other thing. Sometimes your agent, they're smart. They could try and get you in before the rest of the posse. If you need to make an offer, make the offer. There's a phrase in real estate called "time is of the essence."
Mm-hmm.
If you want your offer to be given full consideration without competing with everybody else, but that again comes down to you need to have your ducks in a row. You need your pre-approval. You need to be ready to go and pull the trigger. And that's so if you're confident, you're ready to go, and you've taken care of all those other issues in terms of your hesitancy or not to purchase the property. You got to make, and it's inevitable. I see it with buyers all the time, particularly first-time buyers, but they come out and it's like, okay, well, we look at it, a little bit of paralysis by analysis. A week goes by, then they want to buy the property, and there's 5 other offers.
Yeah, it's too late.
Yeah. So,
all right. So I think we're coming up on about 30 minutes for today's broadcast. I know we've got a longer list, so maybe we can make this a 2 or 3 or 4 part episode.
Draw it out.
Let's quickly recap a couple of the points. So number 1, it's getting ready early. So get your pre-approval. I think a lot of the issues that we talked about can be solved by hiring the right real estate agent to represent you when you're purchasing a home.
Mm-hmm.
You want to be open to possibilities. Okay, so you want to see the potential in a property, but you don't want to turn a blind eye to what the negatives are too. You got to take a look at both sides of the coin, and especially in today's market, you need to be decisive. If you believe it is the right property, make that offer.
Yep.
All right.
That's it in a nutshell,
So
Patrick.
I think that's a good summary. We still have plenty more to cover, so we can add that to the show topics for future. If that's okay with you, we can interview you a little bit more on some of the do's and don'ts, Declan.
Sure.
All right. Fantastic. So let's wrap it up here, hitting the half-hour mark for today's show. Another episode of the Wicked Awesome Report. I'm Patrick Queally, your host, joined by Declan O'Toole, our co-host here. So thanks for joining us, Declan.
Thanks for having me, Patrick.
And give us a comment, a like, a share. Head over to the Wicked Awesome Report Facebook page. Give us a like there, and you'll be notified next time we broadcast live. So until the next episode of the Wicked Awesome Report, hope everybody out there stays well and stays awesome. Take care.